We were expecting a little pullback from the 3 weeks of U.S. strength, but not to this extent. Janet Yellen recanted her U.S. strength story. Let's roll the intro and talk about it. Traders, what's going on, guys? Cleveland here with another Sunday market breakdown. Hope you guys are doing pretty good. I'm doing pretty good myself. Reviewing some of the Fed minutes that happened last week, and a couple of other things fundamentally, and that I want to throw back over to you guys to kind of give you guys a little bit of causation as to why we moved in this market, how we moved in this market this week, and obviously we're going to save a couple of things for high impact a little bit later on. And if you guys have not seen the last week's Monday market breakdown, we had some really good calls on the euro and the pound, and we had a really good call on the NZD long in our trading community, okay? And last week we did talk about inflation a little bit, so I'm going to put that down below. And again, folks, this stuff happens very, very quick, okay? So you want to make sure that you're subscribed and like the video for your boy, all right? So to get things started off, man, and again, I'm going to save a lot of the fundamental stuff, the details for next week, but we had some low readings on CPI, aka inflation, last week, all right? So we did have some ideas as to where we thought the euro could go before we got the sell-off outside of the 17 flat. Here's a snippet here for the euro-U idea. Here, I thought we would get a pullback up into structure, and I'm assuming this situation there as of right now. So, I guess we're really still not out of, the weakness territory or, a potential strong move on this euro-U until we break out of that 17 flat. Okay, you could still have a potential little up move on this euro-U, but again, I would love to. So the story that I've been selling you guys for the past month and a half is this U.S. strength idea, right? But I have not forgotten about the idea of, maybe a correction, within those moves. And this week was one of those weeks where I thought that we could probably pull back up into that original base where that euro dropped out of, that 1870 number. So that's exactly what we said, and that's exactly what we got, but we never got the leg back down because of the bad CPI reading that came out, okay? So we'll go into the details tomorrow, but, again, that stifles things a bit. Here's the dollar index. The scary thing about the dollar index is week after week for the past, I think, 9 months, we have not made a higher high, except for the last month. Okay, we did put ourselves in a situation where the actual dollar index pulled up, made a low, and then broke a high a little bit, but again, we did not sustain. It is a 23% retracement level right now, which is major. If we get a break of that level there, then we should correct up into the 38.2, or at least into the middle of those two levels there, okay? So that's, again, why I really want this U.S. strength. But if we're not getting an uptick in inflation, it's like, well, what the hell are we doing here, okay? It's not, I don't think it's a good idea to just be parading the idea of U.S. strength. I don't want, I don't want you guys getting the wrong idea and saying, Cleveland told me to buy the dollar, and then, the dollar capitulates. So again, always rationalize how these ancillary markets are doing, and, other things involving the U.S. data releases that are coming out. And one thing, again, that probably stifled that leg from pulling back lower from the 1870. Again, here's a chart. I'm going to leave it up for a second. Remember, the Catalonia, I keep saying Catalina wine mixer whenever I talk about this.
This is a fucking Catalina wine mixer.
But the little city that's pulling out of Spain, all right, they want to have some kind of divorce proceeding, some kind of referendum from Spain. Again, that would stifle the euro a bit. They actually did not do so, right? So the president, who was supposed to be gung-ho and say carte blanche, hey, we're pulling out of Spain. Well, he said, hey, we're pulling out of Spain after we make good terms with Spain, okay? And so that kind of got investors to say, all right, well, this guy isn't so nationalist or irrational. He wants a good deal. And the thing about Catalina is that 90% of its citizens did vote to leave Spain. Okay, so overwhelming majority of those people want to get out of that nation there. But again, Spain, their magistrates say it's unlawful for that process to go about, right? So again, right now there are negotiations, and the fact that there are negotiations gave the euro a little bit of strength. So that's our euro. Now, again, I want to paint a more technical picture for you guys. So we're going to pull over into the charts and talk about that a little bit later. Now, amazing call on the pound, right? So again, about 4 or 5 Monday breakdowns, Sunday breakdowns back, I mentioned my disappointment that I wasn't able to catch the pound extension. Well, we compensated for that because a lot of us got in on the pound sell-off, a nice little 23 break. And then last week, here's a replay of what we said about pound being back down at those lows where it sat at the base of that original extension out. Here's the recap there. Let me show you where we're at. If you guys notice, we're really just kind of we're back onto that structure. We're back onto that base of, that extension out. okay, for that extension outside of the, this level right here was basically Article 50. Definitely will have this market exist and be able to have price discovery up into these levels here, right? There will be tradable levels inside this range now that market had that tremendous move out. So now the risk of buying this market is definitely lower since markets have been there before. Okay, so I clearly mentioned that, hey, guys, look, I'm still fairly bullish on the pound, right? I mean, overwhelmingly, the fundamentals align to have pounds trading a little bit higher than what it is, right? I mean, a lot higher than what it is. A lot of people think that pound should be back up into the $40s. And if you look at the weekly chart on pound, it's something that you really want to take notice to. Folks, this is a retest of a very serious base. Okay, this base is the Article 50 base after the Article 50 announcement came out that pound would have to go through, again, more negotiations to leave the European Union. That brought a lot more weakness into that pair, and we pulled out of that move during that enormous extension, and now we've just rested right back on it, and we were basically catching the retest of that structural resistance there, structural support there. Okay, so again, very clear move there on the pound. I'm thinking that we could still see a little bit more upside. I threw out a large nugget for you guys to help you guys rationalize price discovery. That's something that we talk a lot about in our community. Price discovery is extremely important. You guys need to rationalize that when price exists in a certain marketplace, well, then it's very feasible that price can go back down or above in said certain marketplace by a certain degree. But when price breaks out of a certain marketplace, out of a certain price level, and then you can rationalize that for a price to exceed a certain price level that it's never been before or it hasn't been to in a very, very long time, you can rationalize that it will take a lot of different catalysts for markets to break out of that structure, right? And so usually you'll have a fundamental catalyst do the heavy work. And as soon as you get that catalyst actually come into the marketplace and get priced in, usually you're going to have some profit taking occur, right? And usually that profit taking is going to occur actually down into the original launch point, which is exactly what happened in NGBPU. And then now you have market participants looking at those new price structures and saying, hey, look, the new high, it's up here at, whatever the price point is. Maybe I think markets are right now at $31. I'll put the screenshot up there to show you guys. But you have new market participants saying, hey, the new high is up here. It's safe to trade up into this. It's safe to trade up into that, right? It's safe to trade up into the high. Right? I mean, think about it. It's less risky for you to be trading within those levels. But prior to that, I mean, think about how risky it was. You would never just randomly start buying markets up or selling markets off within that range. Okay, so price discovery is something very important that you guys want to rationalize. All right, so we had an NZD buy. I don't think I have any footage of the NZD buy. So I know Nick wanted to go long on this NZDU. I like long as well. We're already up 0.3% today. So you get a crack right outside this level here, man. I just see a lot of upside potential. And your downside is pretty good, actually. Looking at it in this perspective. Screenshots, we were on a webinar, and Nick mentioned that he wanted to execute on an NCD buy right at 71 flat. So markets started to consolidate and down there at that low. I was hoping for a little bit more consolidation, and we actually got it. Markets ended up maybe lasting within that structure there, that consolidated low there, for another like 4 or 5 hours, maybe up into even 8 hours. And that kind of gave me a little bit more confidence that, okay, if we get a break right here at the 71 flat, we can start pushing back up into those highs again. And that's exactly what happened, along with the weak inflation number that came out and the Fed meetings that came out that were very, very dovish. Man, you saw, again, NZD ended up back at, I think, 71.90s. Okay, so that was an amazing position within itself there. That wasn't really originally called out in a breakdown. Okay, that's why it's so important to get inside of the community. So, folks, what I'm going to do is we're going to pull over to the charts. We're going to look at a couple other things. CAD, for example. I want to take a look at CAD because CAD really didn't move and it stayed consolidated. And we had some ideas on that. And we had some ideas on the Aussie dollar as well that, actually, man, Aussie dollar pushed and just ran higher, outside of nowhere, really. It seemed like that was a very, very random move. But it was mainly because China actually, they threw out their import numbers, and Australia is 35% of their import numbers. And China was expecting their numbers to be at 13%. They ended up at 18%, and they're expected to go up again in the next 2 quarters. Okay, so that's putting a lot of strength in terms of trade on the Aussie side, right? So that's why I saw Aussie explode up into that range, probably affecting the NZD as well, right? So guys, let's pull over to the charts. Okay, make sure you guys are subscribed, and interesting enough, what you should do is like the video for your boy. Okay, let's pull over to the charts. All right, guys, let's pull over into these charts. We'll start off here with this Euro U. As you guys can see, we did gap down a little bit. I'll show you guys in a second on that 4 hour, but Overall, folks, take a look at this. So not bad for the top trader team. We broke low. We took that sell side break. I don't know if you guys remember, but a couple of Monday market breakdowns back, I wanted to short this extended move higher, so that actually worked out. And we called the bounce higher as well from last week. Now, if you guys remember that previous week, I was hoping for this leg right here to correct up into structure and then get the break. Okay, but as you guys can see, we actually didn't get the size of the retracement I thought we would. And we actually just ended up consolidating down here at this low that entire week, last week. But 2 weeks ago, sorry. But last week, as you guys can see, once we broke outside of 1770s, immediately we were able to fulfill the price area that we were previously wanting markets to go up into. So now, oh boy. All right. So you guys know last week, the forecast was push up into structure and then the break lower. Now, again, I'm not thinking that this market is going to pop outside of this 1670 level. Okay, these 16 highs. Not yet. I need a little bit more. I need a little bit more coming out fundamentally, man. Again, we'll talk about it tomorrow. But at the end of the day, right now, the U.S. dollar is not looking so hot, okay? We're still getting some weak inflation numbers, and, outside of that, we just don't really have much coming from the administration, right, the government, in terms of any kind of reforms, okay? So until we get updates on that, I think it's a little bit, I think it might be a little bit risky to short markets outside of this level here, unless Draghi this week, okay, make sure you watch High Impact tomorrow, unless Draghi this week throws something out there in terms of how he's going to be doing his QE in 2018. Remember, he's going to mention something along the lines of how he wants to pause or stop QE in 2018. It's really between 6 and 9 months, okay, and maybe a full year. Okay, if they see that they're going to have to do this accommodated ultra low monetary policy all the way until the end of 2018, then we could potentially see this market break outside of this low. Okay, but if they're fairly hawkish about slowing down monetary policy, giving us an idea as to how many bonds they're going to be purchasing month over month. Right now, again, they're at 60 billion. Let's see if they lower to 50, 40, 30. Again, we'll keep an eye out there on the FOMC meeting. We'll be live in our trading room talking about it as it's coming out. And again, depending on what happens, folks, we may see this euro pop back down into the low of this range here, or if it's hawkish, we'll come up and pop outside of the 19 lows, okay, the 18 highs. All right, so that's what we're looking for. So we got to keep an eye out for that. My thing is right now, I'm kind of liking that the markets are somewhat correcting a bit, and I would love if they kind of just sat right here in the middle of these 17 highs, 18 flats, because then if we get the break higher, I think we'll get a strong momentous break higher, and if we get markets to push lower, we potentially will be able to crack the 17 flats. It might start taking markets lower, but right now I don't have a trade bias on it up until I maybe get a little bit more structure. At the end of the day, it's a bullish move. I mean, you guys know what we're looking like on this thing on the monthly. Okay, I mean, we're still hanging up there in those highs, and this is where we are here for October. So at the end of the day, we need that U.S. strength to prelude. Here's your dollar index, just to show you guys again, what we've been looking for all year long was this corrective move here, okay? But the really important thing about this dollar index, guys, is the euro is 60% of it, okay? It's 60% of the dollar index. So if this thing pops higher, it's definitely because the euro probably was weakening over the next, couple of months. All right, and I'm just trying to say if we look at this market, near the end of 2017, if this market's higher here, well, the euro definitely went lower. All right, it's going to be rare that you'll see this market higher and the euro higher. Again, the euro is an enormous part of the dollar index, unless you have Aussie and pound just go dramatically south. Okay, just sell off dramatically. Which will kind of have implications on that other 40%. If the euro gets stronger, folks, well, we are not going to break outside of 94 flat. All right, so that's going to be really important for us to keep an eye out on. So let's see what happens. Let's see how structure forms. We'll be inside of the member area, kind of doing a day-by-day on it, and we'll see what we get. All right, but other than that, right now you're getting somewhat of a little intraday pop outside of this 23.6. Might have been some opportunity there, but I'm going to wait it out and see how markets align over the next couple of hours. See what it looks like Monday session, and then maybe I'll have some pretty good ideas as to what to do. Very interesting things coming about, though. Very interesting. Okay, got the U.S. weakness. You got potential Draghi weakness. Where is it going to play out? Personally, I'm I'm betting that the U.S. weakness is going to be prelude. To be honest, it's just really not looking as good as the numbers last week are not looking as good as I thought they were. All right, so moving on. Sorry for the rambling. So you had Aussie dollar. Aussie dollar was an interesting position. Again, you see the massive corrective move higher here. Again, that's mainly because of China. China does around 35% of all of Australia's exports. Okay, so when China saw 18% increase in exports, when there was a forecasted 13.3 or 13.5% increase, you had a dramatic corrective move higher, right? And then we also saw on Friday those bad CPI numbers, those bad inflation numbers that, again, gave it even more strength. All right, so that pushed us all the way back up into the mid of this consolidation, and where we're sitting right now. So maybe this is a decent opportunity to potentially, have some little corrective move back down into 78.30s. Okay, so the 78 lows, and then maybe you get your price move back higher outside of structure. But I haven't really been messing with this Aussie too much. I played the move over on that NZDU, and we'll take a look at it real quick. Because I was going to save it, but let's keep a look at NZDU real quick. Because, again, if you're trying to get in on the buy, just ask yourself, okay, well, if I want to play the buy, you have to break out a structure. That was probably one of the best places to execute on it. Currently, right now, you're sitting right at the 61.8% retracement of this entire extension, which is a pretty decent pullback level, right? So if markets want to retrace a bit, then you might have that start happening up here in this level. So if you want to get in on the some type of intraday buy type situation, well then yeah, maybe there's going to be something there. But in terms of a swing trading scenario, I'd wait it out and wait to see what markets do. Now again, something intraday could pop up, and we'll be talking about that over in the community. But right now, I have no trade bias for you. We ended up getting in on the NZD buy during the middle of the week, and that's really just about it, right? So other than right now, we just don't see a real decent structure. I would need structure to form a little bit better, maybe up here at this high, and then that structure formation could probably give us a decent entry. Now, USD CAD might be something that gives you some opportunity because we've been fairly consolidated up here in this level there for the past 2 weeks, okay? So if you guys notice here, this is our USD CAD. And after we had this market rip outside of this 2350s, 23 mids, you had markets run to those 25 flats, even as high as the 25 highs, 26 lows. Wow. And so at the moment, we've just really been consolidating. So again, this is another situation where if you want to play that U.S. weakness or U.S. strength, well, I mean, you're going to have a very directional move, okay? I mean, either you're going to just pop higher and it's going to get a sheer straight move higher, or, again, you'll get a really decent move lower. So, again, usually you don't see the structure look so clean, and obviously markets could go up or low. And obviously markets could go higher or lower, but I'm just saying that since there isn't too much structure in that above area or in that below area, you should get a pretty directional move. So right now, again, this is just another scenario where if we just keep getting U.S. weakness, I'm thinking that we might be able to break outside of this these 24 mids right here, these 24 highs. So a break outside of 24.50 really should lead us back down into the 23s, the 23.50. So right around 100 pip move. Okay, right around 100 pip move. I just don't see too much adding up for the U.S. this week. If we get it, then we get it. But right now, the bias for me is a potential U.S. weakness until I can see the Fed come around with maybe a little bit more hawkish ideals, or Trump coming around with some type of tax reform ideal, right? USD JPY was something that the team was in a bit last week, and they were trying to go short, and as you guys can see, short was looking pretty good. There was a fairly tight area of consolidation up here at these highs, and then as you see, markets ran down to this 23.6, and they're somewhat hovering around it. You did get a breakout of that structure, so right now at a $1.11, really a $1.12, $1.11 highs, you're having this USD JPY just kind of hang around there. And looking at it on the weekly, boom, you might be in another scenario where U.S. weakness will play out here, folks. And this might be one of the best places to play it here, right? So U.S. CAD and USD JPY might be a decent situation, all right? And so I'm thinking that dollar index could probably come back down inside of its consolidated area. And I hate that it's already at the mids. But I think that this dollar index could potentially start maybe hammering outside of this level here. start coming under this 92 highs, so 92.70, we might be able to pull back down into this structure. It's a danger zone. It is a danger zone, but we'll just have to see what happens, okay? And obviously what could push us there is the euro. So don't just look at the dollar. The euro could push us outside of that level. And if the euro does it, then you might see it reflect in some of these other pairs, okay? So keep your eye on this USD JPY short and keep your eye out on that US CAD short as well. Now, could they go long? Absolutely, absolutely. I mean, and could we potentially catch the longs? Maybe, I mean, when my bias is short, I really don't like to kind of just play on both sides. I'll kind of just say, oh, shit, it went long and I'm just not in the move. Maybe I'll just kind of say to myself, well, let's see if, this short plays out. I'm just really going to get in at a better price potentially. That's actually what happened over there on that Euro U when I kept wanting to buy that Euro U back up into structure. I talked about that last week, right? So every time markets came a little bit lower, I'm like, hey, maybe I'm getting at a better price. Maybe I'm getting at a better price. And then, boom, you have your breakout. And then it's like, oh, yep, see, that was the better price, but I actually didn't execute on this move, but my guys did real well. So, guys, that's pretty much it. We can look at a couple other things, the Euro GBP. And that's something that folks like to keep an eye on. I like to see how markets came right up into the previous target 2 for this short position that we had on this Euro GBP. And right now, again, we're somewhat back down into the mids on this Euro GBP here. So we do have some things coming about with Brexit. I might mention it tomorrow. They're going through a couple of negotiations, and they came to a little bit of a stall, and that might have implications on this GBP USD. We'll see. But overwhelmingly, you guys can see that this GBP is seeing some strength in the last couple of weeks, right? I mean, it really is. So people like to look at the Euro AUD as well. Euro AUD, fairly consolidated, pretty interesting look. Looks like you got a little trend line going on here as well. Might be something to play on this Euro AUD. I'll keep an eye on that. I like the wedge formation here. Usually when you get these wedges, you get a pretty strong directional move. So we'll be talking about that with the team a little bit later on. And last but not least, I'll look at the GBP AUD because that's something that has always been pretty interesting. And again, here's another scenario where we might get some GBP weakness. And if we get the GBP weakness, we'll get a crack underneath this 68.11. So 68 lows, maybe we can come back down into the, wow, oof, I'm not saying we can come back down into the 63s, but maybe we'll come and hit off on maybe the 66s, maybe even the 65 mids. That could be a situation there if this GBP weakness continues to play out and there is this stall of over Brexit. All right, so guys, look, your profit, always my motive. If you guys need anything, let me know. Like the video for your boy. Make sure you're subbed so you can get this stuff out and you can respond to these moves pretty quickly. All right, so guys, look, high impact coming out tomorrow. Might have a couple extra things coming out this week as well. Got a couple new launches coming on the other side for top traders. Good job executing, folks. I'll talk to you guys real soon. Peace.